Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Wednesday, February 5th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up a penny and a half at 496. March soybeans were down 6.5 at 1068.5, and March Chicago wheat was up 4 at 581. This morning, we had an export sales announcement, 330,000 metric tons of corn to Mexico, and that's for the 25-26 marketing year. So real nice sale there. Good morning, everybody. Lots to digest here. We continue to get new announcements and news stories relative to the trade agreements with China. I know that they're still scheduled to be talking. Also announced this morning, China announced they redirected 600,000 of their wheat imports. So it was interesting to see that. Justin, we were talking before the show. We focus a lot on corn and beans, and we've touched a little bit on wheat, but maybe wheat's certainly been making a nice trade. So a few thoughts there, and then we'll throw it morning.
Yeah, thanks, Dan. Yeah, I mean, I think we've, wheat's just been the, short leg, the proverbial pissing post, pardon my French, but, in the industry of the complex, right? That's been everyone short wheat versus long corn, short wheat versus long beans. And it's, kind of being the residual supplier of wheat in the world. It's paid to have that mentality, right? We just never seem to get the business. We're undercut consistently by Russia, Ukraine, basically anybody. So now that we're in a much tighter global wheat stocks to use environment, similar to corn, starting to cover some of those short legs. We're, looking good on charts for above the 50-day. Obviously a little bit of negative news, I guess you could say, out of China. China's always a tough one for obvious reasons, but some of the signals of, diverting some wheat shipments here, making it hard on Brazilian bean imports with phytosanitary concerns. That we know that they have a struggling economy. Their demand could just be off in general, but I think a lot of things point to that, which begs the question of, Trump, China negotiations, what ag goods can they buy? Will they buy? Are they willing to buy a big slug uneconomically? Maybe, maybe they don't care to bring a bunch in and store it. Maybe they, that's a cheap way for them to, make Trump happy or, rebalance some trade deficits. So a lot, obviously, to see what happens with that front. We are at areas in all these commodities, specifically corn and beans where, we're getting into, interesting levels, right? We're closed above the 200-day for the first time in March. Beans, we're kind of flirting around that area this morning, around that 1070 area, back and forth. So I think it'll be important kind of how we close this week as far as the trend and everything there. We made new highs in all the corn contracts overnight again. So, at some point we'll get a little exhausted here. It's kind of going up every day, but read a lot of things on, what the max corn fund long is, and that we're close to that max level. And that's, I was just doing a little looking, just to put in perspective, there is really no max long. I looked at if you look at just the managed money, right? There's 110 managed money funds. There's 110 players right now long corn. They're long 340,000 contracts or so net. The position limits for a single trader in corn is 57,000 contracts. So to put in perspective, if each one of them were to get max long, it'd be 6.3 million contracts. So it'd be 20x what they are now. Now that's just like saying, corn has a 800 bushel potential. But I think just putting in perspective, there is no max. It's just looking at what the longest they've ever been before is. Ben brought this up to me yesterday. I think somebody posted that cattle, maybe you can confirm this, Ryland, but they outdid their previous max long by 30% this year. That'd be like being long 650 or 700,000 corn in our market. So
you can get there.
yeah, I think I think trying to, say the funds are at a max. I mean, you could say that they've, gotten loaded up if they start making a bad trade, that I think that matters more than just saying, well, they're long or short this much, so that's the most they can get. That's kind of silly in today's terms, especially with the amount of money out there moving around all of our markets, the equities. A lot more money has been created. Dustin's talked about this, printing money around the world. There's a lot more money in circulation. And so I think just looking at the fund, what position they have is not really a good strategy. Now, if they're, like for wheat, for example, if they're, a large short and the market's going against them and they're not getting paid to have that position, then yeah, I think that's a concern. If corn or beans, if they have really big positions and the market really starts going against them, then yeah, that makes sense. But just to say that they have a big position, they're making a lot of money having that position and they keep making money, to say that they're just going to get out because they're sick of making money, that's really hasn't historically been the right idea. So that's kind of my little tirade on managed money position. But
yeah, I'd hate to be on the other side. You get a drought and a trade deal and a lot of things line up. I mean, they'll show you how long they can get,
Yeah, it's just, it's always been tough looking at, prices and saying that this is too high of a price. And I remember a couple of these years where you go make, and I'm not predicting this at all. I'm just saying, thinking, the kind of environment we're in, you can make new highs and go make double previous all-time highs. We saw it happen in Minneapolis wheat and some of these markets those are the kind of markets that really bury people. And I don't think we're set up for that right here, but sometime in the next few years or, the next major drought, or you get a couple of these things going the wrong way and big open interest, you can have these massive squeezes. And I think kind of a detriment, the CME likes to make money on volume and they continue to raise these limits. It's just a matter of time. It's not if, it's when that you basically corner the market, these funds where they own more than, so just those numbers I threw out there, 6 million contracts, like open interest right now, total in corn is like 2.5 million contracts.
3X. Wow.
So, it's 6 million contracts open interest. That's 2 full crop years of corn, about 32 billion bushels. And that's only 110 players. So I just, try to be cognizant of, I think just that's a stat that's a tough one to live and die on, I guess would be my point.
Well, we always talk about that too. The the crop insurance doubling, right? And for fall price, we've always said, there's always cheap protection and ways to cover yourself out there. And that one of these years, you could see a market makeup where it could try to take it out.
And look that's not my, we're not the ones that are going to be beating the drum that this is the year we're going to 10 or,
No.
It's just, I think just looking at, trying to be realistic on, risk out there. I think some of these options we've talked about this a long time, I don't think they're appropriately factoring for risk. Going into one of the most unknown seasons I can remember to start, really tight corn, really tight global stocks, completely unknown on acres, obviously unknown on Trump and what's going to happen with all these things, and pretty cheap volatility. I think that has a lot to do with the type of players that are in our market. They're used to looking at relatively cheap equities volatility and options on stocks. And I think their models look at 20% vol as a bargain. So they don't mind, buying futures, selling options, all those kinds of things, which is fine. But equities also have 20% moves in one day. So they're used to trying to manage around some of those. So, when we get, talk about, why the hell is corn up 7 today on no news? It's such a small move compared to all the other markets that this money trades. So,
yeah,
I just think, really being mindful of like protecting yourself, not, drawing a line in the sand and saying, hey, we're at, 480, so it has to be done going up and I'm going to sell everything, or vice versa on the way down. You're just saying this is way too cheap, we can't go lower. I think we're going to see, we've got lulled to sleep a little bit here. I think we're going to see bigger ranges than we think.
we got we're through two settlements on spring crop insurance. Corn 466 3/4. Beans are at 1068 and a half. Dustin, what are your thoughts? I know we've talked about as corn has been rallying. Some of those ARC and PLC decisions are getting a little bit interesting for guys, and need to reevaluate on some of this market action. So, what's on your mind this morning?
Yeah, it's I think that decision is not necessarily ultra clear this year for corn like it would be in some other years. Kind of depends on your situation, and some of these county yields are getting up, quite elevated compared to the old PLC yield. So it's kind of first a crop insurance decision probably, and then a farm bill decision, just depending on your area. But yeah, it is. Those are some good backstops, really. I mean, farm bill is something that we may need to rely on this year. Granted that particular payment won't be until October 2026, but it's going to be based on the outcome of, of that selling window, September to September for the 25 season. One thing I would note is that, there's a big rally in the Brazilian currency, the real, over the last, month or so. In fact, this is the longest winning streak for the real in 20 years, since April 2005. So Reuters article about that last night. I think that's a big part of what we can attribute some of this strength to as well. So kind of keep that in mind as we're coming back down on the real in the overnight session. What that means certainly for risk. As we go through this month, I think for us at least, a lot of our guys that are going to go and attribute a big portion of their plan B hedging along with the crop insurance policy, our risk goes down every day for the growers we work with, we think, over the next 19 business days. So that's why we're hyper focused on that, where we average for the month. It's nice to see that the trade war is kind of delayed for this month, because it does, potentially give us that chance to enact some risk management going into an uncertain time, as Justin mentioned. But certainly the wind is in everyone's sails again, and it's kind of exciting to look at risk management again. So I'm happy to see it either way.
Yeah, farmer sentiment edged up in Purdue, Justin's alma mater there. Purdue University's ag economy barometer increased to 141. I don't know what that means, but farmers are a little more excited, I guess, given the markets and some things that are going on. So that was a good sign.
Yeah, I think that goes right into the, what we get planted and how much we get planted. But I will say something too on the front for managed money funds, and just, the leverage in paper markets for corn is not nearly what it would be for like SRW wheat, for example. We haven't really had that move yet, where we've kind of really lost that connection to the cash market. I think it's just a better market than wheat is. But you look at some of these years like 2007, 08, or most recently 2022, and when you have this larger multiple of total number of paper contracts that are open compared to the crop size grown in the U.S., where paper is supposed to be held by the cash market, we get these big divoids, where we've kind of completely lost fungibility to the market. And, I'm just thinking about anyone that was just a straight hedger of SRW wheat going into that, the Russian invasion of Ukraine date, any old crop wheat that was held for, let's say, March or May of 2022, all of a sudden local basis is no longer bidding off those contracts. They're bidding off September, which is at a massive inversion. And that's what you get when you get too many paper contracts, is loss of fungibility. So to Justin's point about the whole CME, kind of catering to larger volume, it hasn't been an issue yet for corn, but it's Murphy's Law. It could eventually be.
Yeah, I mean, that's where, it's almost like wheat has two supply and demands. One's like the physical and one's the demand for paper, and we ran into shortage of futures, so again, not predicting this at all. I think just kind of trying to talk about comments that people have made. A lot of people have gone broke looking at what's happened in the past, and that's all that can happen. I was one of them that got really burnt in bean spreads one year, for example, where a November, May contract where there's always going to be more beans in November than May, for example, was 50 over, which was the all-time high. And, that was kind of like the place to sell. It went $3 over in a short order. So 6x the previous inverse. It ultimately corrected, but ran everybody in the meantime. And ultimately, it was the case. We had plenty of beans on November. We were much tighter in May. But, these markets can get goofy. So I just think when you always think about the risk you're putting out there versus the reward. So a lot of times when we talk about low vol and trying to catch like a 20-cent premium to get like a double up, I've seen a lot of programs out there pushing, hey, this program is going to tie in with crop insurance, and you sell one unit at the spring price and guarantee another unit and we'll give you a 20-cent premium. Like, that's super risky for such a small payout. And so I think part of this is just looking at, like, don't give up so much for so little. Just try to think of like all the different scenarios, or look at maybe a cheap insurance thing if you are going to do something like that just caps that overall risk.
Yep,
So
very good. Real quick, Ryland, let's talk about cattle. Giving it all back, all 2 weeks of work, giving it back in last 5 sessions here. And hogs are feels like they're just married to tariff news right now. So what are your thoughts this morning?
Right. Yeah, it's been kind of a crazy session here in the meats yesterday, but yeah, we took out pretty much 2 weeks of trade over a very short period of time. We haven't seen a lot of cattle actually trade yet. I mean, it sounds like some of the offers are around 208 in the South, and the optimism is kind of waning, I would say, overall on the cash side of things. And now futures have slipped down to this level where you're kind of at some crucial support. You're starting to get into trade closer to the 40-day moving average. And just overall, we're seeing beef prices start to weaken up a little bit. So there is a little bit of a change in kind of the near-term direction right now. So I think all eyes right now are just if we can find some stability, if we can kind of let some of this play out. But overall, yeah, it's been a big break, and not a lot of people, I think, were really prepared for that. So we'll see. I mean, it feels like the longs in this market are pretty loaded up, and they got to show that they're willing to play some defense here. But seasonally, we are at a time where we're starting to get into this new month, and we have seen some big corrections in the past, at the kind of second half of February. So we'll see if that holds true. Just kind of watching the technicals, watching the data, watching the headlines. But overall, yeah, I'd say that just a lot of kind of cautious, man, I hope this thing holds right now, sentiment going on in the cattle side of things. And there really wasn't that big of a change in the open interest yesterday. It was only down 267 on the live side. Feeders were up about 400. So it just feels like it's there's not a big change in ownership at this point. A lot of wait and see what happens. So on the hog side, yeah, we recovered from the limit down trade. Absolutely all headline driven at this point. I mean, seasonally, prices should pretty much stay pretty firm here. And I think we're starting to see that. We did see cash back up about $1.97 to 85.40 yesterday. Carcass was back up. So I think, once again, just really looking for some stability. There hasn't really been too much real fundamental change here. Just a lot of the change in sentiment, a lot of volatility, a lot of panic, a lot of emotion. But, I think just it kind of lends itself to a little bit more of higher level of protection, I think, from the producer side. So once again, just kind of looking for some stability and maybe some better fundamental news on the hog side.
Appreciate the update. We just came into the open here. March corn up a quarter right now. 495 is the last. March soybeans are down 10 at 1065. And March Chicago wheat's up 5 1/4 at 582 1/4. Tomorrow morning we'll have export sales at 7:30 Central. We'll look at those, talk about them in the war room, and then also Jack will have a little more information, but in the outro. But as we're in the crucial sprint to deciding crop insurance, give us a call. We'd love to talk about your operation, go through some of the ideas that we're looking at. We've got some great deals on new clients that are coming on board here. So give us a call. Love to visit with you and talk about the things that we do. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. And again, thanks to everybody that supports the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in freefall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.